my next guest is taking the glass half full view and says between inflation, rising commodity prices, tightening spreads, and low rates, it's basically a perfect environment for investors. Joining me now is Jonathan Golub. He's Credit Suisse's chief U.S. equity strategist. It's great to have you here, Jonathan. How bullish are you?
Like you said, the environment is really strong. Let's just start with this inflation. Everybody's concerned that it's going to squash equity valuations, but interest rates are low, which is supportive. And it's not the inflation that's a concern for equity valuations. It's the fact that it may, taint the cost of capital, and it hasn't been doing that. Revenues are driven by the economy. You just asked Steve Leisman a second ago, but nominal GDP, which is really what revenues are driven by, are expected to be 7.1%. And when I say expected, that's just a consensus view among economists. That's a rip-roaring number. Margins tend to move with commodity prices, and you have higher oil prices. So in the old economy, energy, materials, industrials, they're big beneficiaries of a lot of this. So it really is a pretty good environment because interest rates haven't moved in tandem with this inflation risk.
It's ironic. Unless your price targets change, the market's actually overshot, right? Weren't you at 4,600? We're up at about around 47 here on the S&P.
Listen, you're absolutely right, which is why in August, we actually put out a price target for next year, kind of almost saying, listen, this year's going to come to a good end. Let's kind of start pushing our forecast further out and focusing on how strong things are going to be for next year. Now, when we put those forecasts out, they looked insanely high. Now the market seems to be catching up to us, even on our next year numbers.
Shepard Smith here. Thanks for watching CNBC on YouTube.